Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Monday, February 27th, 2017, and this is the Daily Report for Gold and Silver. After trading nominally higher throughout the morning session as well as overseas, as we went into the close, gold prices and precious metals as a whole did sell off. Closing off about $5-6 on the day. We're looking at most active April futures contract, and that's at $12.5260. Putting it down about $5.60 on the day, about a 0.5% drawdown. Now, it did trade to a high of $12.64 on the day. The low today has been 51, and that's a pretty critical area because that is the area that we are looking at as a support area. So it's critical that we see those prices hold. But for now, we're sitting right there at about $12.52, $12.53. Of course, we went long over the weekend. We went long on Friday, stayed long over the weekend at about $12.50. As far as silver is concerned, that is also trading lower on the day, off about 0.6%, trading about 12 cents lower at $18.22. The low on the day has been $18.20, so we aren't near the lows with a high of $18.47. So traders, absolutely no doubt, we have seen gold really spike and have some increased volatility throughout the day. We are looking at an extremely short-term chart to start to show off, this having candlesticks the length of 13 minutes. So we're looking at very, very short moves. This, of course, is the beginning of the trading day. This is overseas trading. As you can see, for the most part, it was trading unchanged right at around $12.56. But then it really spiked up aggressively to hit these highs at about $12.65. However, that was to be short-lived because we saw the market in a period of, about 4 hours as we went into the close, sell off dramatically from about $12.65 to about $12.51, $12.52 in that area before forming a bottom and begin to come off of these highs just a little bit. As I said, we're closing at about $12.5280, putting it down about $5.50. And that's what it looks like, of course, on a short-term chart. When we go ahead and pull up, for example, our daily chart, and I've just done that, each candlestick representing a day, what we can see is really the way that it sold off. This is the high up at around 65. But what is really important to me when I look at this chart is our current level of support that I'm putting right at around 1250. In terms of historical data, we certainly get that. You can see that right here. And this, of course, is back in October and November of last year. This, of course, being just prior to the major fall that occurred during the election of President Trump. You can see that big spike here. And from there, of course, we saw this market trade dramatically under pressure, trading to 1120 before starting this upward climb. And we've talked infinitum about the various waves that we have within here. The fact of the matter is I would have liked to have seen more follow through. Actually, what I would have liked to see is the market not sell off going into the close. However, I don't really believe that this is any kind of a big statement overall. If anything, there is really an anticipation of tomorrow's address by Trump as being unknown and uncertain. And depending on what comes out of his address will really determine whether or not we'll see an increased volatility in equities, whether or not we'll see gold continue to push up. It will be interesting to say the least. But for now, we're sitting up at around, as I said, call it 1253 when we look at gold. As far as other precious metals, and we're looking at a silver chart right now, this of course being our daily silver, one thing that we can say is that on this most recent climb, this starting at the end of December right here, has been pretty methodical and slow and steady, almost like the tortoise and the hare, that giving me a lot more bullish sentiment for silver than I have in the past because we're not seeing these tremendous spikes and increased volatility. However, when we look at the MACD, and that's what we have at the bottom of the screen, you can see there was almost an attempt to cross right in here, but then it came back up. So we do have the MACD, although it has been moving together It has not crossed as of yet, which tells me that this bullish trend that has been so prevalent in silver is probably still fully intact. Trading for the majority of the trading session slightly lower on the day and then closing in essence unchanged, but in green, meaning an uptick on the day, which means that it's at a new historical high. Dow Jones Industrial Average at 20,837, putting it up about 16 points on the day. When we look at the Standard & Poor's, that's up about 2.5 points at 2369. Again, right up at the contract historical highs. And then last, of course, would be NASDAQ. NASDAQ also trading higher today, up about 1/3% at 58.61. Now, the dollar, which has been trading interestingly in terms of it oscillating between trading under pressure and then finding support, is in essence unchanged today at 101.14. The key right now is the fact that everybody is anticipating the speech to Congress by Donald Trump tomorrow and what kind of increased volatility that might in fact bring to the markets, whether or not he'll make statements about tax reform that will really be an impetus to move the equities markets to new record highs, or whether he'll say something that will really increase the volatility and possibly even put some downside pressure on the market. So traders, even though these moves are small, they're incremental, they're not very large at all, the fact of the matter is that there is a consistent slow move to higher ground almost on a daily basis, absolutely today. So even this tiny move of 15 points higher on the Dow, as you can see on our daily chart, absolutely puts us at a new record close. And that has been almost, I like to call it a broken record, in that we have been going over that time and time again. Now, in terms of our weekly chart, of course, it's Monday, so we're not really going to have much action. You can see that right here. We don't really have the gap, though, that we've had in past weeks, as you can see here and here. We also talked about the fact that what I'm looking to see on the Dow Jones Industrial Average is whether or not, and let me kind of draw this, it's obviously not to scale, but it's called a bearish three gaps pattern, and it is an exhaustion pattern, and it is created when you get strong green candles like we have seen that tend to gap on the open of the following period, this of course being a week. And the sentiment behind this Japanese pattern is when you get three gaps, gaps 1, gap 2, and gap 3, that is considered an exhaustion pattern. And it usually tells you that you're going to see it come and backfill a little bit and have a little bit of a correction. Now, based on today's open, though, we did not get that gap. So it tells me that the fact of the matter is we might not see this pattern unfold in the way I was looking at on Friday. And that could be very bullish. Again, this all comes down to what President Trump says tomorrow in his address to Congress. And traders, lastly, I do want to take a look at the U.S. dollar. Dollar up ever so slightly. I'll call it fractionally higher or fractionally unchanged on the day. We are looking at a weekly chart, and we get a sense that we had some really strong support as it came down a few weeks ago to 99. That was a level we had anticipated. Now, as it moves back up, we do have resistance at 102, and the question is whether or not we will see a continued climb in the U.S. dollar. My sense is that this is backfill after this sizable move down from just about 104 to 99. So that's almost a 4% move. I think we'll see some backfill, and I still believe we could see lower dollar index value in the near future. Traders, there is absolutely no doubt that tomorrow's speech, the address to Congress by President Trump, could shake things up quite a bit. They could be very constructive for the equities markets. Things could go awry or go the other way, and we could see a big surge in gold. But the bottom line is that tomorrow's address is an unknown, and the uncertainty factor, as far as I'm concerned, really ramps up. I spoke about the fact that John Najarian had pointed out this tremendous accumulation of gold call options, and 20,000 of them being added today is considerable going that far out, considering that the open interest was about 170 contracts prior to this addition. What that says is these are all new initial positions. It's not offsetting or covering a position, and it really bodes to the fact that there are some very, very strong bullish factions bidding up the price of gold, even though we're seeing some weakness in the underlying futures markets. Maintain your current long position in gold. Maintain your current stop level. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.